Hi, thanks for tuning in. You're watching Ask BQ, a show where all your stock market related queries get answered. I'm Smriti Chaudhary and with me is Alex Matthew. Before we begin, I'd like to remind you that you can send in all your questions through the YouTube live chat or through the WhatsApp number that's flashing on your screen right now. You can also send in your questions through any of our social media channels. Now, let me introduce you to our guest for today. We have with us Mr. Devarsh Vakil, Deputy Head of Retail Research at HDFC Securities, and Hemen Kapadia, Senior VP Institutional Equity at KR Choksey Stocks and Securities. Welcome and thank you for taking the time out. Before we jump into the questions, Alex, what is the focus of the market today?
Well, market aside, Smriti, I think the focus of this particular show at the start on focus is going to be jewelry stocks. Of course, if you look at the markets, you have the benchmark Nifty 50 that is up about 0.6% at this juncture and above the 19,600 mark, recouping losses that were seen in yesterday's trade. And of course, yesterday also we saw the Indian equity markets move lower to a lesser extent than the rest of the Asian peers at least. And we're moving up in tandem with a lot of the global peers at this juncture. The broader market seeing quite a bit of traction as well. And the real estate pack, I think, is arguably the most exciting pack in trade today. As a whole, that segment of the market is up about 4.6% last I checked. That's the index, real estate index. But as I mentioned, we're focusing in on jewelry companies because even there have been quite a few interesting updates. The likes of Kalyan Jewellers sending in their business update for the second quarter with a revenue growth of 27%. And you saw Indian operations grow as much as 32%. They've said that they have stable gross margins at the showroom level and blended margins, however, have fallen. Now, there was also an update a short while back on Titan and the entire group. So the likes of Kalyan Jewellers as well as certain other companies, TBZ for one, and also Senco Gold, all of them in focus. So let me go across first to our fundamental expert. We've got Devarsh joining in. Devarsh, what's your view on Kalyan specifically? Because this is the second day in a row that we're seeing the stock rise. And what's your pick in the jewelry space?
Right. So we do like jewelry as a space. Maybe not immediately as stocks have run up, but I'll explain the rationale. So you mentioned Titan, you mentioned jewelers. These companies have a lot of tailwinds behind them as a sector. There is clearly a shift happening from unorganized to organized. Just to put numbers into context, Alex, there are about 4 lakh jewelers into India, and viewers will be surprised to know only 14,000 of them have been BIS certified. And if we were to look at listed large players, we can count them on our fingers. Players like Titan, Kalyan, TBZ, EC Jewelers, they are hardly 5 or 7 listed big jewelers in the India. Now, compared to the size of market, there is humongous room for the growth. And because there are so many regulatory changes, the tailwind is there behind them. The GST implementation was first, and then hallmarking of the jewelry has given a lot of growth opportunities to this company. So clearly, we like this space. If you see the numbers from the Titan, in the March quarter, they showed 24% growth. After that, in June quarter, 19% growth. And in the recent quarter, again, they have seen the 19% growth. So clearly, top line is growing. Now, what needs to be watched is whether, because of all this growth, whether they are able to maintain the margins or not. There, we think that there could be some pressure. And that's why we are a little cautious on the stock at these levels. We'll think that will let the price correct a bit, but otherwise, over a longer term, we do like this space.
All right, let's take a technical check on this as well. So, Mr. Hemen, what do you think? Are you also constructive on jewelry stocks like Titan, Kalyan, and Senco Gold, and any other pick that you may think may give gains in the near future?
A very good afternoon to you, Sati. Thank you for having me. Titan is in a multi-year uptrend, frankly speaking, so the laws of gravity don't seem to apply to it. But yes, importantly, it's in a very established, mature long-term uptrend. Looks good, makes it a buy on every decline. The other stock that you mentioned, Kalyan, a little bit of positive data. Okay, we have data for the last 1.5 or maybe 2 years, but it's probably not enough to take a longer-term view. But whatever data I have, stock is in an intermediate uptrend and most probably a long-term uptrend. So further upside seems like a distinct possibility. The stock, which I believe is the dark horse, is TBZ. Looks very interesting. It's broken out after almost, let's say, 5 years or so. We're at 123. So on a decline, I think TBZ looks good for a target of 180. Looks quite positive on the longer term chart. Indicators are in a crossover buy, higher tops, higher bottoms, consolidation, positive divergence, breakout. I mean, it ticks all boxes on technical parameters.
Fantastic. And this is a stock, by the way, that is at the high point or close to the high point of the day today, 7.5%, more than 7.5% gains for TBZ. Let's get in questions. Questions have started coming in. In fact, interestingly, Rashida has just written in and she's asking about Tangamail. It's the one stock that I did not mention, and it is up and about in trade today. Devarsh, I'll come to you. Do you have specific view on Tangamail? She's saying that she's bought at levels of 1,000. Let me just pull up the chart and see where it's currently trading. It's up and about, as I mentioned, 4.5%. So it's trading at 1,390 or thereabouts. Should she hold on to this, Devarsh?
Yes, I think she should hold on to it. So as a space, these stocks may not be an attractive entry point now, but over a longer term, I think there is a huge room for growth for all these companies. Gangamalai also is one of the leaders from the South India. And actually, see the way industry is shaping up, earlier, most of the jewelers were making money from plain gold jewelry, where the inherent limit to make money from making charges is now very less possible. So what is happening in the industry is that the complex and intricate designs are gaining importance, and that's where the South Indian based players have taken a lead. They have understood the importance of design, and they have created brand equity, and that's why they have the ability to charge higher making charges, and that's why it is supporting their margins. So I may not recommend a buy at this level, but she has clearly gotten at a good level, so she should continue to hold for a longer term. I don't have these stocks under coverage, so I'm not able to give you a specific target.
Fair point.
All right. So a hold for Thangamai and not a buy at this point. Next up, we have a question from Manisha Goyal, and she's talking about ONGC stock. Now, crude prices have been hovering around $87, $88, but there's not been a major impact due to the Israel-Hamas war. Let's look at the technical first. So, Hemen, what do you think about the ONGC? She bought it in 2021. Should she continue adding more?
If she wants to add more, I suggest wait for a small cool off. We've been up for, I think, some 13, 14 months in a row. The setup is positive, no doubt. We walk into a short-term correction with it. So if it closes below 180.50, she'd get an opportunity at 176. So currently, it's correcting the move from 150 to 192, a small time and price retracement. So if it closes below 180, I would look to buy at 176. So I would say buy on decline. Setup is positive. We need a close above 195 for this move to continue further, but on every time frame, short term, medium term, long term, the stock looks technically sound.
All right, let's take a fundamental check on this as well. Devarsh, what's your view on ONGC?
So we had a target of 190 at the beginning of the year, and because of the geopolitical uncertainty and all, it has actually achieved. So stock has given 30% return, already given a good return. As Hemen pointed out, I think it is buy on decline. I don't see much upside from here based on current fundamentals. And this pop, because of the geopolitical uncertainty, is a good opportunity to book profits here. And then once it declines, maybe one can relook at the company. So my advice would be to book some profits and wait for decline to enter again.
Okay, Devarsh, I've actually been looking at this quite closely myself, and incidentally, this question is coming in from Pushpanjali on WhatsApp. She's asking about Office Park REITs, which she has bought at levels of 343. Now, I noticed that a lot of these REIT companies are seeing their prices revert back to their IPO stage or very close to their issue price, interestingly, and that would at least hypothetically provide you with a good option in terms of the yield that you would get going forward if you buy and hold. These technically are stocks that you or businesses that you buy for the long term because of the distribution income that you get. So what are the prospects according to you for Embassy, and what strategy should you employ?
Right. So these companies do offer great stable yields for investors who are looking to park some money in the real estate space. Incidentally, these companies have come back to good levels, and that's why it does make sense to buy them. But I'm not, when it comes to equities, I think we are of the opinion that there is money to be made in the real estate player directly, construction and infrastructure developers. So if you are a risk cover investors and we want to reduce the volatility and reduce the risk, maybe this is a low risk, low return opportunity in the RAI REITs. But if you are looking for a higher returns, I think the opportunities are there in the construction, infrastructure development side, on the cement side. So I'm of the opinion that if you are a little bit looking to look for a higher return, maybe look at the construction players, road construction players. As we know, the state elections are there, general elections are going to come next year. So we are expecting a lot of projects to come their way. Road construction players like PNC, HC Infra, KNR Construction, or maybe large cap infrastructure players like L&T may offer good risk reward at this level. So I would recommend that investors can look at those space more closely.
Okay, so but then if she's bought at levels of 343 and she's got 11 shares, should she hold?
I think she should hold. She should temper her return expectations, but continue to hold. I don't see any reason to sell out at this level.
Fair point.
All right. Next up, we have a question from Netra, and she's talking about Patanjali Foods. She bought it at an average price of 900, and she's looking for a 6 months view on this. So let's take this to the fundamentals first. What is your view on Patanjali Food? The stock is around 1308 currently, about 5% up.
Right. So stock has underperformed compared to the other peers, and there have been some disappointments from the QIB levels where they had promised a lot of growth, but they are not unable to deliver it. And one of the reasons could be there they were able to not scale up the brands which they thought they will be able to. At these levels, again, it has been underperformer, and I think they should start recovering their margins because most of the raw materials have come down. So I'll wait for these quarterly results, and if they are able to show some growth, then I'll hold on. If the results which will come out in next 1 month or so, if they again disappointment, I think it will be better to switch away from that. We had earlier covered this company and had some targets. Those targets were achieved on back of the QIB which they did last year. So now I don't have any specific target, but this investor can continue to hold, and I will say put a close watch on the quarterly results which is upcoming. If they perform, then they continue to remain in your portfolio. Otherwise, we will not be patient with them anymore.
All right. So not a lot of patience from you. Hemen, what do you think? What are the charts showing on Patanjali Foods?
Okay, technically, I think the picture looks a bit different from what they were by feel fundamentally. Things are looking a bit promising. We've been range bound for the past 4 months or so. There's the 4th month. I mean, it's not fair. We're halfway through this month. The level to watch out is 1377. We are currently at 1306. We are in an established uptrend. Setup is turning positive. A close above 1377. I think it will most probably do that in this calendar month. We are heading towards 1500. So it looks good. Small resistance before 1377 is 1320. So I would be more sanguine. It looks technically promising.
Right. We've got a question coming in from Rajesh, one of our regular viewers, and he's a senior citizen, he has pointed out in the past. He's asking about Dixon Technologies, of which he's got 50 shares. He's got a long-term view on this particular counter, and he's got an average acquisition price of 5,015. He's saying that from what he has seen, it has recovered from lows of around 2,700. What should be his approach to this counter with the short to medium term outlook? Should he stay put or exit? And what will be the target price? He's looking for both fundamental and technical views on this. So I will first come to you, Devarsh, on the fundamentals.
So the industry is doing quite well. These companies have a huge space. Opportunity is there. If we remember, Xiaomi or Xiaomi, they are Dixon is the supplier for them. They recently opened a smartphone plant for them, and that kind of opportunity is still there. India, as we grow in our disposable income, more and more consumer durables, consumer brands want to come into India, and the opportunity to manufacture into India and serve the Indian consumer as well as exports out of India is growing. So manufacturing, make in India, that kind of opportunity is a very vibrant opportunity for companies like Dixon. As viewer pointed out, stock has recovered smartly, and he is holding it through it. So my advice would be to hold. This is not a level to enter, but opportunity is still there. Earlier, stock had seen a highs of 6,000 or so, and if the numbers continue to remain robust, it can go back to those levels. So I would advise this viewer to continue holding his Dixon shares.
Okay, so with the price at 5158 currently, it is above his average acquisition price. So what are the technical indicators pointing to at this juncture, Hemen?
Alex, the technical indicators are showing that it wants to continue its up move. We've had a small cool off, I would say, and now we are heading towards 5,600. Two levels to watch out for. A very short-term level is 4,900, and the medium-term level is 47. These need to hold. I don't think they are under threat. Stock looks fine. We moved up a bit of a one-way sort of a scenario, but the setup still isn't wobbly. So these levels in mind, possible target of 5,600 looks good.
All right. Next up, we have a question from Netra again, and she's asking about Aditya Birla Sun Life AMC. She wants to know if it's a good stock to hold as it has underperformed as compared to other AMC stocks. Now, if I look at the Aditya Birla stock, it's up, it's around 433 and it's only up about 0.23%, so not a large gain. So, Devarsh, what's your view on the fundamentals of Aditya Birla Sun Life AMC?
So the post-result, post-IPO and all, it has actually underperformed. If my memory serves me right, around 650, 700 kind of IPO it came, and then it fell to all the way to 300 and below, and that has not created any wealth for the investors. So relatively in the pack, it has been underperformer. I think that the opportunity which is there in front of these companies are humongous. The financialization of saving is a theme. We see it is clearly a long-term theme, and it is actually working out. More and more people are putting money in the form of SIPs. The AUMs of the asset management companies are growing. So that the macro picture for the industry is quite positive. But Aditya Birla is not able to gain that kind of market share. It has recovered a bit from the lows, from 300 odd levels. It has come back to 430 or so. So there could be some more recovery, but my view will be to sell on the rallies as this stock moves towards maybe levels of 470, 480. Maybe I'll switch to a better asset management companies. If you see the performance of other players in the financial savings space, stocks like BSC or CDSL or other asset management company, clearly they have done quite well compared to this one. So my advice would be to sell on rallies.
Incidentally, Devarsh, while you're on the subject, Netra is asking, in fact, a couple of our viewers have a similar question. Other stocks possibly in the wealth advisory space other than Anand Rathi. Now, Anand Rathi, I think, well known because of the kind of run rate that they've managed to have, and they've typically, and correct me if I'm wrong, under promised and over delivered, at least based on the track record that they've had over the last year and a half or so. So any other stocks that you have in mind?
I would stick to stocks like CDSL or BSC. Anand Rathi, I think it has been a great performer. When the budget came and many people thought that since there were regulatory challenges in MLD, the company may not do well. But as a space, wealth management will do well. As we grow, as the disposable income grows, savings grow, there will be requirement for wealth managers, and I think the space will continue to attract a lot of players. So if somebody is holding on to wealth management players, I will continue to hold. Otherwise, exchanges like MCX, BSC, or agents, depositories, that's a space which we should hold on for a longer term. These stocks have, mind you, they have run up. So I'm not recommending a new entry at this level, but if somebody had gotten at a lower level, continue to hold.
All right. Let's take a quick technical check on Aditya Birla Sun Life as well. So, Hemen, what are the charts showing, considering it's been an underperformer among other AMC stock? Are there gains in the near future?
Yes, there has been an underperformance, I think, very, very clearly. But it's a slow and steady mover. And yes, further gains, yes. I don't think the speed of appreciation is going to improve dramatically from here. That doesn't look like happening. But even on the longer term charts, it seems to suggest that the worst is over and we're looking at further upside. So gains, yes. Slow moving stock, yes. But further upside, yes.
Okay, the last question now. This is more generic because I think all of our viewers will benefit from this, and we'll put it up on social media separately as well. What are your top picks, gentlemen, at this juncture? Devarsh, your high conviction picks at this point?
So I recommend two spaces. First is banks. I think there is, in an era where there is geopolitical uncertainty and there is uncertainty over the export companies, I think Indian banks will do well. There, the large PSU banks like SBI can continue to do well in private sector. We continue to like stocks like Federal Bank. They are brick by brick, they are executing their strategy, and they are likely to emerge as one of the larger banks in the private sector. So banks is the one area where we continue to recommend investments. Another thing which I briefly alluded, infrastructure, cement, and construction space. I think 2024 could be a very good, interesting year. And that's where companies like large cap stocks like Larsen or in cement, Ultratech Cement, longer term investors can look at these companies. I feel they are offering a good entry point and there is money to be made there.
Fantastic. Hemen, I'll come to you quickly on your technical picks.
Two stocks very clearly, Alex. First one is Reliance, oversold, 12-week decline, downside limited, positive divergence at support levels, bounce around the corner. The other stock which I like is IPCA. We've been consolidating for the past 3 months on the cusp of a breakout. Looks good, clearly further upside.
Okay, Hemen, thanks so much, and Devarsh as well. For those last recommendations, as well as for answering all of our viewer questions. I'm sure that they've benefited significantly from today's session. Now, just a quick reminder before we end, we've got a lot of earnings action that kickstarts tomorrow onwards. We've got Tata Consultancy Services, followed by a host of other very important names in the IT space. And besides that, also, you have couple of companies from the HDFC stable that will be reporting their results. You can find all of the details and analysis right here on BQ Prime, both live and on the website bqprime.com. So do check it out. And that brings us to the end of this edition of Ask BQ. I hope that you found it useful. Do tune in tomorrow. We'll be back to take all of your questions live. Stay tuned. This is BQ Prime.